Is the real estate market going to crash? Well, the short answer is no. Based on the numbers, the market will not crash even in a couple of years to come. But many factors will play in favor of a pattern change. While the housing prices exploded during the pandemic, due to a mix of low interest rates and limited availability in desired areas, people bid up the price of homes, lending to an overall increase. This year, 2022, and the next couple of years will be almost the same, especially in the major metropolitan areas. Here are the 5 factors that will impact the housing market in a couple of years to come. 1. The mortgage rates will continue to climb. 2. The sale price growth are expected to slow. 3. Housing affordability will remain a challenge. 4. Normal seasonal buying patterns are likely to return. 5. Desire for shorter commutes again. 1. Mortgage rates are expected to climb. The constant mortgage rate fluctuations may have even the most informed consumers scratching their heads. They may also have you wondering what exactly goes into predicting future rates. Most housing experts point to inflation and the Fed accelerating its asset purchasing tapering as sure signs of higher mortgage rates, ranging in the upper 3% up to upper 4%, and keep rising slowly but surely. 2. Sale price growth expected to slow. Most likely the housing market is expected to stay robust through 2022, with many of the trends that propelled real estate to new heights last year remaining firmly in place this year as well. Last year, homeowners saw a market in which their properties sold quickly and frequently above asking prices, as numerous homebuyers fought for the winning bid. The housing market is coming off a year in which home prices in the United States increased by an unsustainable 18.8%. Will the housing market continue to grow at this rate, or will it be a little less frenetic this year? The housing market is even tighter now than it was prior to the spring 2021 housing frenzy. Even industry titans like Zillow increased their bullishness in January, increasing their projected home price growth rate for 2022 up to 16.4%. 3. Housing affordability remains a challenge. By taking money out of some Americans' paychecks and creating a housing shortage, the coronavirus delivered a blow to housing affordability. However, in a counter-trend that has softened the blow to buyers' budgets, the pandemic drove mortgage rates to record lows. But that mortgage affordability, however welcome, comes with a caveat. Higher home prices are often going to require a larger down payment, which is often the biggest barrier to accessing homeownership, especially for first-time buyers with low or moderate incomes. And most measurements of home affordability are missing that key data point, the ability to make a down payment. While low down payment loans are available for first-time home buyers, a $50,000 price jump can quickly add thousands of dollars in upfront costs to a home purchase. And first-time buyers with scant down payments can have a harder time winning bidding wars against buyers with more cash on hand. A lot of times, sellers want to go with the sure thing over the person who has to get more through lending. And if the price escalates, and you will have to come up with more of a down payment, but you're already at your limit, you'll get priced out faster than someone who has more savings. Buyers who are able to waive inspection or financing contingency clauses also have an advantage in multiple offer situations. 4. Normal seasonal buying patterns are likely to return. Over the past few years, homebuyer journeys have felt more like a marathon of bidding wars rather than the historic pattern of seasonal sprints. With greater normalcy expected to return to residential real estate markets in 2022, many experts believe that with seasonality will return as well. Buyers are likely to witness improving inventory with the onset of a more classic seasonal home buying. 5. Desire for shorter commutes again. As the pandemic made homeowners reconsider the cramped space in the downtown of the major metropolitan cities, folks retreated to the suburbs and beyond. Some buyers looked to communities near the downtown areas, while others gladly purchased in the further commute communities. more home buyers were sizing up for home's office spaces, outdoor space, showing an increasing desire for a pool, garden, or just more space to enjoy the outdoors. But as the world continues its path for normalcy and offices fill back up again, scores of buyers aim to strike compromises between proximity to the city and property space. For some, that will mean a renewed search for more spacious condos in the downtown areas, while for others, that will mean targeting suburbs with short commutes. At the end, people should forget about real estate crash that happened in 2008 and focus on what's happening now in the market. A market where big investors are taking over the big cities, which left the ordinary buyers with almost nothing to purchase.